approved by the regulators. But
Yep.
there's been a lot happening in crypto and Bitcoin and in the token space um, all year. And I guess it came in for a bad rap, when crypto plunged in value this year. And then a lot of people and investors were sort of scratching their head, and, you know, the alarm bells went off. Now we see a little bit of a comeback, in the markets on Bitcoin, crypto, and all the tokens out there. So maybe things will take a more positive spin. Before we get into all of that, tell us about your marketplace. Tell us about your ATS. Tell us what you do and who your customers are.
Great. Yeah. Thank you, John. Maybe a little background as well in regards to how we got here, if that'll be helpful. So my background's 25 plus years investment banking, finance, large firms, Bear Stearns, now JP Morgan, and Credit Suisse, where I ran private equity placements globally. I ran capital markets for First Horizon, and just moving forward from that. Uh, about 5 years ago, was introduced to crypto, and I was a skeptic. And when I discovered, and this took me about a year, I was a bit of a slow learner, that crypto and blockchain weren't the same thing. That's when the light bulbs went off in terms of my finance background, and fast forward to where we are today. I merged with a DeFi platform called MakerDAO. So DeFi is basically finance on the blockchain, and it's basically a lending pool, and that's why blockchain is so exciting in crypto. That's, again, as I said earlier, how the light bulbs went off. So crypto, we can talk about that, Bitcoin, et cetera, where it's going, why there's plunges, why it's going to be a choppy road, but the Bitcoin cryptos, in my opinion, CBDCs are the future. Maybe in 10 years, it'll be ubiquitous, but we're certainly heading there. And I'm seeing a lot of examples of that. But blockchain itself and our ATS is really very exciting. So this is an evolution of technology, not a revolution. It's on the public blockchain. There's all these benefits of utilizing blockchain, which is basically a ledger. Just think of it as a ledger. It's immutable, so it can't be changed. If someone needs to reverse a transaction, they actually have to put another ledger item in rather than go back and delete that particular transaction. So everything, there's an entire record, and it lowers costs. It's instantaneous. We'll give you examples of that. And it's perfect data, zero counterparty risk. When in regards to what's called an atomic swap, which basically means, for your audience, that transaction occurs simultaneously. And so blockchain for capital markets makes a whole heck of a lot of sense, right? There's T+2 right now for equities. That's settlement date is 2 days after the transaction. With blockchain, you can do that instantaneously. So our primary marketplace allows for an issuer, so someone raising capital, to accept Bitcoin through what's called a self-custodial wallet, or fiat, from a bank. Self-custodial wallet could hold Bitcoin, could hold ETH, it could hold what are called stable coins. Think of them as, in simple terms, backed by the dollar. So a crypto equivalent of the dollar, like USDC. And then there are others out there with algorithmic collateral backing, like DAI. But not to get into that detail. But it's kind of cool. You're an issuer. You're like, hey, I'll accept Bitcoin. I'm raising $100 million. I'll accept Bitcoin. You have Bitcoin, John. Instead of converting your Bitcoin into fiat, into US dollars, and then funding it to me, so there's a cost there, you can actually transact over the blockchain instantaneously. to fund that particular raise. That's what our marketplace is. So it's for initial raises. Think of it as private placements. Now, secondary trading. So there's this huge market of private transactions, real estate, equities, fixed income, structured products. We estimate it's over a $400 trillion market. I think it's pretty well known. It completely dwarfs the current public markets, but it's very difficult to liquidate your positions. So if you invest in a venture capital fund, you invest in a real for 3, 5, 10 years, and there's not a perfect liquidation feature there. So you invest in commercial properties, anything with yield, typically in the private markets, we believe could be very attractive, utilizing our alternative trading system. That's the secondary marketplace you referred to earlier. So you mentioned FINRA and the SEC. It wasn't just FINRA, but FINRA and the SEC. We went through that process, which is very detailed, very difficult, time-consuming, and received what is called a digital asset security alternative trading system license. And that'll allow us, we also got registered for digital cash or digital securities, which means not only in the primary issuance, you have a wallet and you can utilize Bitcoin to fund a investment opportunity. We can actually transact with Bitcoin with a digital security, a stable coin with a digital currency security. CBDCs, when they become available, CBDCs are central bank digital currencies issued by governments. They're in process.
And we can talk about that in a moment, because that's fascinating to me. Does it take away from the whole concept of, DeFi? But you continue there, Pat.
Yeah, no, absolutely. So you can transact. I'll give you some examples here. So you invest in a fund. Let's say it's a well-known private fund at KKR or Apollo, or these well-known names out there in the private equity world. So you're an investor, you're an LP, you would like some type of liquidity. You may want to diversify out of a commitment that you might have. So if we take that fund, we put it on an ATS like ourselves with an order book. An order book means you can see all the bids and asks, very similar to public securities, and you'll have the opportunity to liquidate it. Now, it's a very illiquid market today, but with the blockchain technology, it's much less expensive than the previous technologies that have been put in place. Also, with the utilization of what are called smart contracts, which is where the securities, the security token incorporates a smart contract, all the data or metadata associated with that issuer is readily available. So, in terms of due diligence and et cetera, filings, that would all be tied to that smart contract, which today you don't have. You have, in the public securities, you have a ticker and you have certain information provided, and you typically have to go and hunt through SEC filings, et cetera. Now, with the smart contract, all that pertinent data that is required in order to make an investment decision will be there, which is very exciting. Now, for private securities, that's even more exciting, because that's very difficult to get that information, that metadata. So with blockchain, it's all in one. Think of it as security token. That's what we define it as. And it should make the regulators, from a vision standpoint, this is our vision, the regulators, and from a compliance standpoint, a much more transparent market in regards to all the information is out there. And again, you have an immutable record. So this isn't anonymous like crypto is today in regards to a lot of the transactions that take place. Everything needs to be KYC AML'd. We're heavily regulated. And all that information is readily available. So that's on the front end. And then on the back end, every transaction, even failed transactions that occur on our ATS, are reported to the regulators. So it's Chairman Gensler's very focused on this market. It's still very, somewhat gray in regards to where it's heading. But in 5 to 10 years, it's going to be ubiquitous, in my opinion. Now, that's blockchain. We're not really talking about crypto. But the benefits of blockchain, as I said earlier, perfect data, smart contracts, right? In terms of the underlying issuer, lower costs, utilizing the blockchain technology, increased safety. So remember with AMC and some of the other stocks where there was a trading halt due to the fact that settlement times, there's this period of settlement times, and there were many orders coming in. That wouldn't occur with once it gets to transaction plus zero, settlement time plus zero, that won't occur because that counterparty risk is basically reduced to almost zero. Faster payments, blockchain away from our ATS. I invest in companies on a personal basis, some of which are outside the US. So right now, if you wanted to wire money to an entity family in Poland, for instance, you use the SWIFT network. The SWIFT network can take anywhere between 5 and 10 days in regards to when you initiate the transaction to delivery of the monies. In regards to utilizing blockchain, utilizing a stable coin, as I said earlier, or Bitcoin or ETH, but again, let's assume a stable coin like USDC, dollar for dollar, backed by dollar, you could send those monies over the blockchain from, let's say, a Coinbase account to a wallet in Poland, and that transaction time, regardless of size, could take anywhere between a couple of minutes to 10 minutes.
I'm going to stop you there, though, Pat. I presumably and obviously it's verified that everything is good on both sides of that transaction. That's probably explains the 2-3 day lag with Swift or whatever. But is there any danger with that? It's so fast. If the sender says, "Oh, geez, I think I screwed up here," there's those kind of issues.
Sure, that happens. Incorrect wire information, that happens in TradFi, traditional finance as well. Yes, that's an issue. Eventually, from a UI perspective, that'll all go away because this is cryptography, right? So these wallet addresses are quite long. And I know as a habit, I go over it 2 or 3 times before I send anything, just from to be extra cautious. But eventually, yes, so you could lose. So if I was sending something to you, even locally or overseas, and I had the wrong address, it's going to be pretty difficult to get those monies back. Because again, I approved it, I sent it, right? But there's not a hack issue there. That's more of an inaccuracy in regards to the input of the data. But again, where we're heading is from a UI perspective. Once you go to our primary or secondary marketplace, it'll be very similar to going to Charles Schwab or Morgan Stanley or Goldman Sachs. The user interface is going to be the same. So it's the underlying technology that's what is.
And the underlying technology being
referring to was the size of the private market is over 400 trillion. And real estate being an example of that. And, all different types of private investments. So that's the opportunity in regards to the ATS technology. Our initial focus is structured products and private securities. Eventually, and we could talk a bit about this, the big players are getting involved. NASDAQ, NYSE have spent a lot of time on the blockchain. And they've got teams working on this. So eventually this will be in public equities. We're focused on structured products because we believe that anything with yield can benefit from the blockchain quite easily from an issuer standpoint. And then there could be savings for the underlying investors as well. So as an example, we did a strategic raise recently. We announced it in May. So we had a combination of traditional finance firms as well as DeFi or crypto firms. Some of the crypto firms included Invinium. They included Anchorage, which is a level 1 protocol on top of Ethereum, on top of that Ethereum blockchain, and a whole host of other really great partners. We also had traditional firms like Mirai Asset Management. Mirai is the largest family of funds in Korea. So they're over 700 billion in assets under management, and their interest is moving funds from the traditional system over to the blockchain. So that, they made an investment in us. Also, we had Redwood Trust. Redwood Trust is one of the largest residential mortgage-backed security issuers in the world, based here in the United States. And their interest is, again, to take these RMBS issuances that they do on a regular basis and move them over to the blockchain. And they estimate their savings could be as high as 20 to 30 basis points. So on a $1 billion issuance, could be, $2 to $3 million. Regarding the savings of utilizing the blockchain rather than a third-party vendor that needs to double check who the holders are, that needs to double check wire information, that needs to double check all the verification, because with digital to digital trading, which is what we have on our ATS, digital wallet to digital wallet, all that information is readily available. So that's pretty significant for an issuer. Again, anything with yield, you have these savings on the back end. So that's what's so exciting, beyond the reasons that I already shared with you.
It's so the way you laid it out, very interesting. There are really two parts to all of this. There's the blockchain, which is not going away. It sounds to me like blockchain is the next generation digital platform, if you will, on Wall Street and across the globe.
Exactly.
It's taken us to a new, it's not going away. And that crypto and Bitcoin sort of piggybacked on blockchain. Would I be correct?
Yeah. Well, there would be no crypto without blockchain. And with what occurred with crypto, I'm not sure that blockchain technology would be where it is today. So the two have worked closely together, the two focuses, to allow us to now separate them and focus on blockchain from a tech standpoint. And then we can talk about crypto as well.
Yeah, I think what confuses and makes some investors, retail investors included, and maybe primarily skittish, is the volatility in crypto and Bitcoin. When you see a 70% plunge in value, and also the fact that there were all these negative headlines this year and scandals and lawsuits and so on, it was a bloodbath.
Yes, so that's not going away. There was just news over the last day or so, Solana, which is a layer 1 protocol, was hacked, and I believe over 8,000 accounts have been drained of their holdings. So this will continue. But that being said, I know your background in traditional finance, my background in traditional finance. This has happened in traditional finance, even with the regulatory regime, for decades. There are always issues that come up. So Bitcoin's going to be volatile for some time. I believe it's a store of value. I believe it's here to stay into the future.
You believe it's a store of value, Pat? That's interesting.
I do, because I look at, I look at gold. If I buy gold, I actually never see gold. right? But I believe it's a store of value. In regards to artwork, when we buy artwork, if there's demand, if there's a buyer, that's a market right there. So I believe there is a growing community viewing Bitcoin as a store of value.
Very good. And then medium of exchange, unit
Yep.
of account, does it fit all those criteria, the
Uh,
standard definition of money?
no, I don't think so. I view Bitcoin to me is more of a commodity
Hmm.
rather than and frankly, I view, except for stable coins, which have a currency aspect because they're backed by fiat, so it's some of them. Um, I believe other cryptos are securities. Many are securities. That's the issue with here in the US, frankly, in other parts of the world as well, regarding which are securities, what are utilities, right? I believe ETH, for instance, is a utility, and I'll explain why. ETH, which is Ethereum, which is that blockchain that we refer to, Ethereum has many apps built on it. I mentioned Anchorage, I mentioned Solana, and it's not tens or hundreds, it's thousands. So I view Ethereum as a utility and a really interesting opportunity from an investment standpoint in a way, because it's sort of an opportunity to invest in the Apple App Store as
Yeah.
as an example. So those two I think are very distinct. Those two Bitcoin and ETH. But I don't view crypto. I know they're all called now cryptocurrencies. I think that's a misnomer. And there are many different categories that we could talk about. But you mentioned volatility. The volatility is here to stay for some time because this is a growing market. Think back to the internet days
Yeah.
and all these scams on the internet, right? And when the internet started, from a public standpoint, right, because it had been in place for decades prior, through DARPA, et cetera. But when the internet started, it was basically another news medium for us. We would go there for news, and then it started growing from that. Then email started, and you had to make less calls, and then the iPhone came, and then it became even more ubiquitous, right? So we're still at the early days for crypto. So those major moments for crypto, in my opinion, are still to come, similar to what occurred with the internet back in the day. But we're not there at this point in time. So Bitcoin's going to be very volatile. So my advice, again, this is my opinion, not our firm, but my opinion is that there's if I was an investor, I would just make small investments. Primarily, if I really don't want to dive deep in this crypto world, Bitcoin and ETH, they're here to stay, and make small investments, sort of average over time, right? Dollar cost averaging, is the term used here in the U.S., and ignore the price, because the price will go up. As you said, there's been a bit of a rebound. My view is that when I got involved in this space, I thought cryptos, for the most part, were a hedge against the stock market, for instance, world currencies, inflation, et cetera. And then over the last couple of years, that hasn't been the case. So basically, they all trade in line. If the market drops, cryptos drop. I think that's more of a reality of where we are today.
Yeah.
And so I think over the next 6 months, is there a global recession? Is the U.S. in recession? That's it technically, yes. But in regards to what does that mean for earnings for corporates? My view is we're in for some more bad news. And if we're in for some more bad news, cryptos are going to be hit. And cryptos over the next 6 months, maybe into the first quarter of 2023, are going to be extremely volatile. I'm not quite sure I would invest large chunks of capital unless it was invest and forget about it. But I would invest in small chunks. Again, Bitcoin and ETH, because I do believe 2023 you're going to see a big spike up in the crypto world. Now, why am I saying that? Well, again, we briefly talked about what we are. Our ATS, Oasis Pro Markets. 2 years ago, the large groups, the large banks, bulge bracket banks, would speak to us, but those conversations really didn't go very far. It was more educational. The same for the infrastructure players, the custodians, for instance, the large custodians, and other infrastructure players in terms of reporting. Fast forward 2 years. Today, we're speaking to them all. They have dedicated groups to this area of blockchain. They have right now what they're really focused on in terms of what I call building the rails is Bitcoin and ETH, because institutions are demanding that from them. So that's the difference. 2 years ago it was educational. They haven't been moving into the space because of the retail demand. They're moving into this space, dedicating teams due to the institutional demand. The next step, with the regulatory regime becoming clearer, will be digital securities.
Just to get some numbers on this, Bitcoin is the largest digital asset of all the cryptos. And of course, that's the one that took the big hit. What's the total market cap of the crypto market, Pat?
Well, at its height, it was about 3 trillion. Right now, it's, I believe, a little under a trillion.
Yeah. Now, overall, it's an alternative asset class, however you define that. And within that, there are cryptocurrencies. You said it might not be the best term for it, but some of them may actually act as currencies, right? In that you could take those coins and use it for many transactions, presumably.
Yeah, well, you could use any crypto for a transaction. For our particular ATS, stablecoin, CBDCs, Bitcoin, and ETH, we are comfortable there. I'm not sure we're going to expand that list, but if you own, let's say, Maker DAO, that I referred to earlier, the Maker token, and you wanted to, as long as it was being accepted, right? Like Tesla started accepting Bitcoin and then pulled. It depends on the other end of the potential transaction. Yeah, utilizing the blockchain, any crypto can be transacted with any other crypto. If the seller accepts it.
Yeah, well, that's the key thing here. But I've asked this of others, and apparently it's happening on the state level. You can't use crypto or Bitcoin to pay your Uncle Sam your taxes, right? But apparently some states now will accept.
Yeah, absolutely. Florida, Miami is doing that right now. There are several others, I believe, in Illinois and some other jurisdictions as well. Yeah,
I just wonder, is there a risk for them after taking?
Sure. It's a big risk because we just said it's volatile. So then it's a risk issue. So do they accept it and immediately convert it?
Okay, so it's an immediate conversion.
Fiat. I don't know what their plans are. Some may, take the approach that they would accept it and hold it for a bit of time, based on their views. But I think the wise thing would be to accept it and then convert it into some type of fiat or eventually CBDC.
Yeah. Now, when I think of crypto, and I've listened to experts like you lay it all out so eloquently and talking to others, one of the things that occurs to me is that really all of this also started, leaving aside the blockchain, which is a critical part of this, the backbone, if you will, sort of like a political statement, and almost like an anti-government statement during the financial crisis of 07, 08, and the world was coming apart. We risked having a Great Depression, and there were many folks out there, and very wealthy people and not so wealthy people, were worried about their money. And then somebody came up with, well, we'll have this DeFi, decentralized finance. I mean, that's also the origins of crypto. It's kind of a political statement.
Absolutely, and that's they're deemed the old guard OGs,
Yeah.
or the maximalists, the Bitcoin maximalists or crypto maximalists. That was the anti-government fervor is what started this whole thing.
Yeah.
Absolutely, it's fascinating because I just described institutions, large, well-known institutions, bulge brackets now coming into it, and there are still maximalists and anti-government views, widely shared views on forums, etc., and investors in this whole crypto space. But it's becoming institutionalized.
Yeah, so the way it's going now, you mentioned regulation and the government and FINRA, stepping in and checking, dotting the I's, crossing the T's, and the fact that you can pay even some of your local taxes in some states. You mentioned several things there, which raises several questions. The central banks entering this space.
Mm-hmm.
Are they moving in on territory and pushing out the old players? Is that what their thinking is?
Well, I think it's frankly a bit of 1984 and Big Brother in a way.
Yeah.
To be frank, it's it's basically utilizing, again, this blockchain, utilizing the impact it can have in terms of movement of currencies in a very, very expeditious manner versus today. It also would allow opportunities. So there's data, there's metadata involved that the governments could utilize as well. But that's the direction we're going. So right now, we don't carry around our net worth in our pockets, right? It's all electronic. So it's going to be the same thing with CBDCs. The downside is that the governments that issue this, let's say through the Fed, are going to have the opportunity to know exactly what, if they wanted to, where John is spending his
Yes.
currency or Pat. But that's the direction we're going in. Now, the benefits are, again, more expeditious transfer of cash. So here in the US, in terms of an immutable record that if you're receiving benefits from the government, unemployment, Social Security, Medicare, etc., those funds would be instantaneously delivered to you utilizing the blockchain to a wallet that you've provided or that the government may provide for you. When I say a wallet, it's electronic, right? So there's a lot of benefits there. When there were during the Great Depression, and the downside, there was movement of money issues in regards to who needed it, how quickly to get it to especially the underserved, the financially underserved. So this would be a huge benefit to them as well. The downside is, again, all that data will be similar to what's occurred with DNA matches. I'll use that example, that now that it's in the internet sphere, all that information could be hacked, could be available. But it seems like the newer generations are less concerned about sharing their data. And a lot of what has occurred in crypto is, in my opinion, generational as well.
Yeah. When we talk about the government entering into crypto, I mean, in reality, we've had digital transactions on Wall Street through our banking system and through our credit cards, and through all other kinds of transactions. Not that we haven't had, a digital platform. So how is this actually different? Is it the speed, the blockchain, instant transfer? Is that the distinction here?
Yeah. Yes, exactly. So the UI needs to get better, the user interface.
Mm.
When you say digital, yes and no. It's electronic, different technology
So
versus
really, what we have today is not precisely digital. It's more electronic than digital.
exactly,
Okay.
exactly. But again, the user interface, there'll be all these benefits. Um, we haven't really touched upon DeFi. We've mentioned it, but think of it as peer-to-peer lending opportunities. If you have a crypto, eventually it'll be real world assets as well. But if you have a crypto like Bitcoin here, and you don't want to sell it, you can actually borrow against it at a very, very low interest rate today. So if you have $10,000 worth of Bitcoin, you could go to a platform, a lending platform like Maker or some of these Compound, Aave, and you could using that as collateral borrow $5,000, for instance. Now, what would occur is if that Bitcoin price drops 40%, just as a number, they may liquidate your position immediately, right, to protect the that DeFi platform. But you don't have to go to a bank. You don't have to like fill out application forms. You don't have to have a KYC AML check on you. You can actually take crypto and borrow against it as well, which is really intriguing, right?
Yeah.
Yeah.
No,
Here,
it's fascinating, and there are so many permutations arise from all of this. Uh, it's separate and yet it's not. Are we moving to a cashless society with the advances in blockchain and what you just laid out there now?
oh, absolutely. So CBDCs, I believe China will be the first major power to move heavily into CBDCs. Based on the research I've done, they started in early 2013 regarding the CBDC opportunities here in the US. It wasn't even on the radar, at least from a public standpoint. They've done at least 5 betas in cities with populations in excess of 10 million people, and to work out the kinks. But China is heading in this direction now. The concern is a digital yuan could surpass the U.S. dollar as the world currency,
It
right?
could be a reserve currency.
Yes, absolutely. And that's a risk. And that's why here in the US, from the legislatures down in Congress, they're starting to focus on this area because it could be a weaponization. Not to say China would do that, but
Well,
it could.
it's a stark reminder, a wake up call.
Exactly, exactly.
And,
So
and
I
and
do.
just how exactly would that work, Pat? Is because it would be so ubiquitous and there was so much volume of transactions. Merchants would want to do their trading in this digital one.
Yeah, because again, the examples of blockchain I gave earlier, right? Perfect data, zero counterparty risk, lower cost in terms of transaction, faster payment. I mean, that's just on the surface.
Wow, that's amazing.
But
So
the
no,
US will get there.
yeah. Well, not surprisingly, then the US is also trying to move quickly on a central bank digital currency. Where is that at? When will we see some, um, wrinkles or something rolled out?
Great question. I mean, there seems to be a lot of malaise down in DC in regards to getting important. Recently, some very terrific opportunities have occurred, but we have an upcoming election. Unlike other, and this isn't a political statement; it's just reality. Every 2 years, it's difficult to build a long-term strategy when every 2 years power can shift in
Yeah.
terms of perspectives, Republican versus Democrat. So I don't think the Fed has come out with research papers that any of your listeners can look up.
Yeah.
I believe the most recent was earlier this year. So there's a lot of work being done in this space. I can't predict when, but I would say sometime in this decade. What I would hope it could be to the latter part of the decade, and it will probably be a trial, like a beta, similar to what China's done over the last 3 years, 3 or 4 years, in regards to a small, a small rollout, and then if it makes sense, and roll it out to the entire nation. But yeah, it absolutely. I mean, we're moving in the direction of removing
Yeah.
paper money, paper currency.
Yeah, anybody on Wall Street is clearly paying attention to this. It's inevitable the way, blockchain, crypto, and so on. But there are lots of skeptics out there, and they will remain skeptics. And you said in a previous interview, some of the skeptics consider it, compare it to tulip mania of old, and they will never be convinced, perhaps otherwise.
Yeah, I was there.
Yeah.
I was definitely of that belief. And again, crypto and blockchain, when I separated the two, I started really understanding the tech and then the benefits of crypto. It allowed me to spend more time on it. Yeah, I do think it's generational, as I said earlier. I do think that, I'm not quite sure what the moniker is, but private data is not as important to the younger generations
Yeah.
versus the older generations. Speed is very important, from a lifestyle standpoint,
Mm.
and they've embraced this.
Yeah.
So
A quick word on Oasis. Your customers are who?
Well, we're approved for institutional. Institutional is a qualified purchaser from $5 million all
Mhm.
the way to what QIBs over $100 million. So
Yeah.
all institutions, we're approved for accredited investors as well, retail, and also broker dealers through their underlying clients. So both here in the US and foreign as well. So foreign that meet our KYC AML requirements because we do a full KYC AML on the entity, the individual, and we do AML checks as well. And we can actually, with wallets, since we are able to utilize digital wallets, we do AML checks on the digital wallets.
And you're based where?
So we're based in the U.S. In the New York metropolitan area. We're in Darien, Connecticut, which is about 40 minutes outside. This whole area is full of a lot of talent from a Wall Street, but also a tech standpoint. So it was an ideal location for us.
And how large are you, Pat, overall in terms? Can you give us any numbers, size of number of accounts, assets, and so on?
Yeah, we don't share that, but we believe by the end of the year, we'll have at least $1 billion of assets on our ATS or through our primary marketplace in aggregate. It could be a lot larger than that.
Yeah, and just for perspective, if you can share this, how do you compare with the other players out there, or are you in a different category, like the Robin Hoods and some of the other platforms?
Sure. We're not engaging in public securities, what's called nationally market listed securities. So NASDAQ, NYSE, Robinhood, Charles Schwab, they're not competitors at all. We're focused on the private securities, such as equities, debt, structured products, funds, and utilizing the blockchain technology. So while we do have competitors out there, it's very nascent. The industry is very young. T0, that some of your listeners may be familiar with, was
Yeah.
approved about 8 years ago, and they've been in this market for about 8 years. We're a much later player, but the market is just catching up now. So regulation, not only here in the US, but on a global basis, has been very slow in this arena, but it's starting to move very quickly. So I'd like to think we're set apart, and our timing was very good in that from that perspective, because we're seeing a lot of movement that over the previous 8 years. Honestly, there hasn't been very much before 2022.
So you embrace regulation and oversight by the regulators.
Absolutely. Yeah, absolutely. My background's investment banking, Wall Street. That's the life I lived. That's the life you lived, or that you're familiar with
Yeah.
as well. It's all about regulation. It just makes a whole heck of a lot of sense. And we also believe that most of the tokens being traded right now are securities that are trading on a global basis, and that eventually the regulators will deem them such.
Pat, has been a fascinating interview, and thank you for being on my show. We'll catch up again.
I look forward to it, John. This has been terrific. Your questions were, very granular, and I really appreciate it. It's enjoyable, speaking to someone who understands where this market is going, and but the pitfalls as well. So thank you very much.
Thank you.